The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Risk and Methodology. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello Forex members and subscribers, and welcome to another video in our trade methodology and money management video series. And this is falling under also our our trading psychology. This all connects together. These are the most important components of your trading success, is learning all about these components. And so we're going to discuss a little bit about day trading and the methodologies in there, the time frames, and then we're going to get into a lot of the money management components and some of the trade strategies that you can use along with your method. So first things we got to know is that day trading is the primary method we're going to learn. And day trading it's the method you use for the reason you are here, which is to make money. And day trading involves a number of styles and methods, but I'm going to be honest with you. Trading is very hard and difficult. I think a lot of people get into trading and because they want to find some type of strategy or some sort of method that is really easy that can end up with you getting like this, with a dude in a hot tub with 4 chicks. And, why not be in a hot tub or in a pool while you're already on the lake? Why not? Or you'll end up like this. You have a yacht, friends. That's what day trading means. You'll have this too. Or, you'll get, I don't know what that kind of car is. I have no idea. I've never seen them before. But, you'll end up wearing a suit and you'll have a nice vehicle in the woods. Or you think that trading is like this, where you're just always super happy, standing up, money's flying out of your hands. Most people who are day traders trade alone anyways. But, I don't know, looking at these screens, I have no idea how they're trading, what they're trading. Or you think day trading is going to look like this eventually. No idea what the hell is going on those screens. I just know that there's too many of them. There's a lot of noise. Like this dude. No idea. If you have to use that many screens, you're doing it wrong. Most of the time, trading ends up like this. Or like this. Or like this. Those last 3 images are the emotions you'll mostly feel when you are day trading. Okay? Being very brutally honest with you. If you listen to the psychology courses, then you'll understand what I'm talking about. But you should not come into trading thinking that you are going to make it right away. You're going to lose money right away. Losing money in the market is your tuition. Pure and simple. All right, that is just how it works. Saying that, we need to understand that there are a few approaches that we can take to day trading. Probably all heard of some of these, but scalping. Scalping is a very fast, very rapid, it's quick, and you only hold trades for a certain amount of time, just for seconds up to minutes. Some scalpers, I also want to say that the definitions for these are sometimes very varied. There are some people who are very orthodox about the definition of what a scalper is or what a swing trader is. It seems to vary. Some people don't even consider position trading a thing, like it's just part of swing trading. You'll figure it out on your own, but these are just the definitions I'm using. So scalping, it's very fast, very rapid, quick method of trading. Trades are only held for a few seconds or to a few minutes. Your profit targets are really close. You got swing trading, and that's probably the most popular. It's various definitions and time frames involved, from hours to days or weeks. And then you have position trading, which is, holding, for days to months, large expansive trade zones, trading multi-long trends. It's almost like an investing time frame, but shorter, Scalping. Some of the positives of scalping. Less risk exposure. What I mean is less risk exposure means that you're not holding on to trades for very long or letting them run for very long. The profit targets are very close. They're very clear and concise. They're going to be very, very near where, yeah, I mean, your profit targets are not going to be very far away. Large amount of trades, the volume of trades that you can take as a scalper are going to be more than anybody else. And it can help with the emotional side effect of trading by creating a series of wins. On the inverse, it can do that too. Some of the negatives means, the more trades you take, the more you have to pay in fees. You need to expose more of your account because your time frame is so short and your profit targets are so close. You're going to need to risk a larger percentage of your account to get those bigger wins on those smaller targets. Profit targets are faster and smaller, but the stops need to be wider. There's a lot of when we talk about risk in the next series, we're going to talk about what is the R to R, what is the risk to reward, and it should always be something 1 to 1 or 1 to 2. Scalping, because your profit targets are really quick, and we know that prices don't move in one direction to go in a direction. They pop in and out. So in scalping, you have to give yourself a little bit more of a variance relative to how other traders would do it. So, if your target is 10 pips away, your stop cannot be 10 pips away. You're going to get tagged. Your stop is going to get hit. So scalping is one of those things where you're going to need to have a wider stop range because your profit target is so close it cannot match that. So you're going to need your risk reward is going to be negative. You're going to have a 2 or 3 times risk for a single reward. Okay, scalping is difficult, and one loss can wipe out a series of wins. So let's say our risk to reward is 3 to 1. That means for every 3 wins, if we get a loss, that wipes out those 3 wins. All right. Let's see an example of like that time frame. So here is an hourly chart. We'll do of the pound dollar. All right, and I'm looking at this chart and looking at what we've got going on here. I'm going to go to the 1 minute. Okay. 1 minute chart, and I've got structure trading here. And if we look at the 1 minute chart, we're actually in the afternoon, end of the afternoon. So this isn't the best time, but if we were to take a look at the kind of operation going on in here, our profit targets, if we were considering that we have some type of channel in here. Oh, that doesn't work. And we're thinking, okay, well, if this channel, I want to trade this breakout here. I want to trade a breakout lower, or I want to trade a bounce. So I'm looking at my oscillators. I've got extended conditions in the RSI and the stochastic RSIs down here. So I could say, well, I'm going to take a long here. And what's my target? I'd say, I don't know, halfway here. So I could take a trade right now long at 32.48. And I would say my profit area is at 32.52. So a four pip trade. Where's my risk? Probably down here. It's going to vary. Probably not that far, actually. Now we can check this out. Want it to go long right here. There's my target area. We'll say 5 pips. But then I want to reduce my risk. I have to give myself a little bit more of a variance, because if I have the same type of stop as I do for my profit target, you're probably going to get hit. So if I'm just looking at these levels here on the 1 minute chart, by the way, I don't advise anybody ever trading a 1 minute chart, but just for an example, if I was to go long here, there's my profit target, then I would more than likely make the stop at least twice the amount of pips that I'm targeting for profit. But ultimately, scalpers are going to be kind of great breakout traders too, because, you can use an hourly chart and you could easily just stay. Okay, I'm looking at my hourly chart. I'm looking for some structure on a longer term here. And let's see, I see I've got some type of triangle here. And so the scalper probably come down to a 5-minute chart. And maybe instead you're going to place your long just slightly above. Because we've all seen how breakouts of triangles or flags or pennants happen. They tend to move up or out really on like pretty fast move. And you just kind of, it's almost like front running. You just put your target here and wait, and get in and get out very fast. You can risk quite a bit here. This could even be your stop down here too. Price breaks here, trades up a little bit comfortably enough away where it won't immediately fall back down, but catches some people's short stops and then some people's longs even, and you can trade up higher. That's a fairly decent way to trade if you're a scalper. The next style we have is swing trading. And swing trading is probably the most popular. It's probably one people hear the most about. It's probably the trade style that a lot of new traders like to trade more than anything else. It's the style that I trade, I guess, if you want to call it a style or a time frame. I'm a swing trader. There's also more varied definitions of what a swing trader is than anything else, I think. Requires a lot less stress than scalping. It does require a significant amount of detailed analysis to find the correct entries and exits. And there's not as many trade opportunities as you would have as a scalper, but swing traders, we can find multiple different trades on multiple different instruments and manage them at the same time, where scalpers are kind of limited to one. Maybe some guys can do 3 or 4, but 1 to 2 charts that you're going to scalp of an instrument is kind of what you're limited to, but you get a lot of trades within that one instrument. And then we have swing traders. We could find trades in the euro dollar, the pound yen, the euro pound, the dollar Swiss. We could find all sorts of different swing trade opportunities within various instruments. And so, swing traders, their time frames, they're going to be within a period of, hours, days. Some people say swing traders can even go for weeks. I don't know. I think that's stretching it, but certainly if we looked at something like, let's look at the euro. And if I was trading on an hourly chart, a swing trader is going to look for areas that have been swing highs and swing lows. Sometimes they'll probably kind of plan a plan of attack would be looking at the daily chart. And I would see, okay, well, recent price action. What do I got here? I've got a swing low down here, and I've got a most recent swing high up here. Okay, so I've got these 2 swing highs and swing lows. And so as a swing trader, what am I going to be looking for? Well, I'm going to be looking for any time on the daily or maybe the 4-hour chart or the hourly chart. I've got these levels. If I'm using oscillators, I see that if price came down close to this area here at this red line, I look at my oscillators, they're in oversold conditions, and that would be a good condition for me to buy. And if they were to come back up to this line and the oscillators were extended, I would sell. So swing trading is just taking a position where you're going to short at the top and then buy at the bottom. Easier said than done. That is for sure. So that is what we've got going on with swing trading. And there's a ton of different strategies and methods to trade in swing trading, just like there is in scalping. And we're going to go over some of those in the next videos, and you'll like them. And then finally we have position trading, and that time frame is lasts for weeks or months. Some say just days. I think that's a little too short, but you're gonna have wide profit target areas and stops. It's gonna be a lot lower stress because you're not gonna be staring at the screen, but you're gonna have smaller initial trade amount, because remember that Forex is a leveraged instrument. So if you have a $1,000 account, you know, you're going to be pretty risky putting a 10th lot down for a period of months. And position trading is probably very similar to you if you're thinking of swing trading, because position traders, if I'm looking at a weekly chart, you know, I'm going to be looking at some long-term highs and lows. And maybe as a position trader, I'm going to be looking at maybe the Fibonacci levels between these major swings. So if I know that here was my swing low, most recent swing low, and here's my most recent swing high, here's a Fibonacci retracement, then as a position trader, I'm probably going to say to myself, well, there is a high probability that when prices return to 50% or the 618 level, that prices tend to bounce a little bit. So I could tell myself that, you know, if prices were to get down that level, I would have a resting buy order. You know, I would buy when it got close to that level if these conditions were met. All right, let's just say that the fib level was at the 50% area right where it is now. Then as a position trader, I would say, well, so far in the weekly, we've got a lot of buying on these tails here. And so I would take a long position and I would say, okay, I've got the RSI. We're not oversold, but we're still at the bottom and we're angling up. And then I'd look at the stochastic RSI. We've been oversold for multiple weeks and we're sloping up. So I would say as a position trader, I would be comfortable taking a long here, and then I would just ride it out. I'd ride it out to see where we go from here all the way up to this previous high. That's where I would expect it to retrace some, or maybe to this level here at the 236. That would take probably it looks like a number of weeks to maybe get that high. So we would just kind of let that ride out and trade that out. You could also pyramid into trades too. So instead of taking a full position, you would kind of pyramid it in. So you'd say, okay, here's my first part of my position. I'm going to take a quarter of my position here. If it breaks this most recent high on the daily, I'm going to have another position I'm going to add. And so as your position continues to be in the green, you continue to add on pullbacks. You continue to add on any kind of anomalous retracements. Position trading is really going to be a set target or time period well into the future. Okay, but it's very similar to swing trading, and a lot of the same strategies apply. Again, so in our next video, we are going to be going over some of the swing trading strategies that we can utilize, and certainly some of the money management techniques that we would implement into our trading system. Thank you for watching and have a great day.